Assalamu alaikum. I am Shadat Hussain. I am a study of Banking and Insurance Department at Russia University. Today I will discuss about monetary policy, January to December fiscal year 2024. Monetary policy for fiscal year 2023 to 2024 aim to control inflation, established foreign exchange reserve, ensure credit flow to production and sector, and support GDP growth. However, actual outcomes differ from project reserve money and bond money grew by 7.84 and 7.74 respectively, missing their target. Government and private sector credit grew also fell short of projection, with private loans comprising to majority of domestic credit. A 14.10 drop in Bangladesh Bank net foreign asset contribute to slower reserve money grow to component inflation. The central bank rising interest rate resulting in rising lending and deposit rate. The lending rate increased by 7.31 to 11.52, while the deposit rate grew from 4.38 to 5.49. Removal interest rate caps and rising deposit cost intensified liquidity pressure. Mention significant change compared to the last monetary policy 2023 to 2024. Bangladesh monetary policy impact strategy shift from the previous year, focusing more on inflation control, exchange rate stability, and financial sector reform aimed ongoing economic challenge. Shift from interest rate corridor to reference rate based framework. In fiscal year 2024-2025, Bangladesh Bank introduced significant monetary policy reform compared to fiscal year 2023 to 2024, with a shift from the interest rate coordinator to market-based reference rate framework. Under the new approach, bank and national bank financial institution must set lending rates based on the 6-month moving average rate of treasury bill plus a margin, enhancing transparency, improving policy transmission, and promoting interest rate flexibility. This replaced the earlier efforts include capped lending rates previously at 9% interim inflation targeting, while inflation goal remains at 6%. The fiscal year 2024 to 2025 policy demonstrate a firm stance on content. The central bank raised policy rate 8.5 up 6% in middle 2022, 7.75 in fiscal year 2023-2024. Utilize the interest rate. Inflation targeting enhanced. The policy target average inflation at 6%, though actual inflation remained much higher due to supply chain dispersion, high import cost, and currency uh, depreciation. 2022-2025. Despite persistent inflation, the policy maintains similar target but stronger commitment to inflation containment. Bangladesh Bank signaled monetary uh, targeting by raising the policy rate further 8.5% up to 6 using the interest rate coordinator to control excess liquidity and closing bank to avoid lending non-productive sector. Exchange rate remains. The exchange rate was quest fixed managed thought multiple rates such as the bank buying cash, telegraphing transfer and export rates set by a bank under the Bangladesh Foreign Exchange Dealers Association guideline. Bangladesh banks moved toward a unpaid market determined exchange rate system. This included introduce of clearing peg like system allowing gradual adjustment. Credit growth management 2023 to 24 target private sector credit growth 40.1%, bond money growth 11.5%, lending rate cap to limit credit of productive sector and intense consumption. Fiscal year 2024-25 target private sector credit growth 11 to 12%. Bond money growth target reduced to help control inflation. Policy shift. Impact on quality credit over quantity, focus on productive and export orange sector, effort discourse over consumption and unproductive borrowing. What are the tools used by Bangladesh Bank? Bangladesh Bank, the Central Bank of Bangladesh, employ to a comprehensive array of tools, maintain monetary policy, regulate the financial system, and ensure economic growth. Belong the in-depth overview of those tools categories into monetary policy instrument, regulatory mechanism, financial stability measure, and foreign exchange management. First on monetary policy instrument. Bangladesh Bank use several monetary policy tools to control inflation, establish the currency, and support economic growth. Policy rate. Repo rate control money supply by affecting growing cost of banks reserve. Repo rate helps manage liquidity by increasing how much bank deposit with Bangladesh Bank. Bank rate served as a benchmark for long-term interest rate. Open market operation. Bangladesh Bank buy or sells investment securities to inject or absorb liquidity in banking system. Stationary reserve requirement. Cash reserve issue requires bank to hold or option deposit with Bangladesh Bank. Stationary liquidity issue maintained bank maintain percentage of liabilities in liquidity asset. Regulatory mechanism. Bangladesh Bank ensure to stability of the financial sector through several key regulatory mechanisms. Prudential regulation. Those includes capital adequacy requirement to protect bank against loss and rules asset classification of provision to address potential non-performance loans corporation government extension. Bangladesh Bank maintains government's practices such as proper board competition and strong internal controls to enhance transparency and accountability. Internal control and compliance. Bank must implement effective internal control system. Financial stability measure. To safeguard the financial system, guide system risks, Bangladesh Bank implement the following measure. Stress testing. Bangladesh Bank conduct regulatory stress tests on bank access, their resilience to economic shock, identify potential financial stability report. Producing report and publish to provide instant the health of financial system and guide policy decision. Foreign exchange market. Bangladesh Bank manage the country foreign exchange reserve and regulator foreign exchange transaction maintain external stability. Exchange rate policy. Bangladesh Bank introduced growing FX system to price more flexibility the foreign exchange market. Foreign Exchange Regulation Act 1947. This act empower Bangladesh Bank regulator payment dealing in foreign exchange and import-export currency, anti-money laundering, and combating financing of terrorism. Bangladesh Bank enforce AML and CFT measures to protect financial system from illicit activities. Know your customers guideline. Banks are required to collect verify customer information, prevent identify theft and financial fraud. Suspicious transaction report. Financial institution must report by transaction that appear suspicious consistent with customers' no profile. Technological innovation. Bangladesh Bank leverages technology to enhance its regulatory and supervisory function. Suggest policy reform need in Bangladesh Bank addressing structural challenges for sustainable growth. Bangladesh Bank had achieved strong economic growth led by the RMG sector, remittance and large employees. However, to sustain progress, reach upper middle income status in must address structural challenges like poor government's weak infrastructure, financial instability, and low human capital. Third, strategic policy reform. Strategic governments and institutional quality. Governments issue corporation buoyancy and lack of accountability, higher development and investment. Civil service reform, modernized recruitment and performance system, reduce political interventions, anti-corruption measure, strengths independence, use digital tools, ensure transparency, decentralization, empower local government with reduced training to improve local governments. Accelerating infrastructure development. Infrastructure challenges high cost and low productivity due to gaps, energy transaction, and logistic, energy reform, boost renewable, improve guide reliability, remove insufficient reporting, reforming the financial sector issue, high national financial liquidity, weak governments, and limit credit access SME and rural areas. Banking regulation, State Bangladesh Bank overthink and enforce and fuel recovery, financial inclusion, capital market, develop board market, and enhance transparency to support long-term financing, enhancing human capital development. Despite improvement, the primary education Bangladesh suffer from skill mismatch, inadequate investment, quality education, and vocational training. This undermines labor productivity and limits innovation. Educational challenge, skill mismatch, and low investment in equality education reduce productivity and innovation. Curriculum reform, update curricula to focus on soft skill and digital education. Vocational training, expert programs with private sector input and quality certification. Liberalization trade and improving investment climate. Trade barriers, high tariff and bureaucratic hurdles hinder trade and investment. Tariff reform, lower tariffs and remove non-tariff barriers to boost export diversification. Trade facilitation, digitize and streamline customer fraud and documentation to cut cost. Dailies. FDI promotion, create on-stop service, simplify business process and stems legal enforcement. Addressing environment and climate change. Climate vulnerability. Bangladesh faces several risks from flooding, sea level risks and pollution. Resilient infrastructure, build productive infrastructure and integrate climate risks into planning. Sustainable urbanization, enforce zoning law and promote eco-friendly transaction for pollution control, enforce regulation and support clean technologies, key industries. Reforming taxation and public financial management, low tax revenue, limit tax collection, affairs development funding, tax reform, broaden to tax-based, reduce explanation and simplify tax structures. Digital administration, use ICT, enhance compliance and reduce leakage, spending efficiency. Supporting agriculture, modernization and rural development. Low agriculture productivity, outdated method and poor market access limit growth. Taxation service, promote modern climate smart framing and high value crops. Market access, upgrade rural infrastructure and strong connected farm to market. Land reform, ensure clear land rights to boost investment and reduce disputes. Conclusion, Bangladesh monetary policy focus on maintains price stability, supporting economic growth and ensuring financial system stability. Bangladesh Bank employs tools like repo and reserve repo operation, cash reserve ratio, stationary reserve ratio, liquidity ratio, and operational and OMO that to manage liquidity and credit between 2023 and 2024. Key reform included removal towards market-based interest rate system, policy rate adjustment to address inflation and greater exchange rate flexibility. Those since aim to improve monetary transmission and manage inflation more effectively. To further enhance effective policy effectiveness, recommendation reform include better cooperation with fiscal policy, greater data transparency, and stronger financial market infrastructure. Thank you, everyone.